What's up, guys? It's Aryan here. Have you ever wondered how to start investing or where to begin? Let's chat. I'm Aryan and this is I Invest. Welcome to my channel where we look for investment ideas, news, and opportunities. How should one start in the complex world of finance and investing? Still, after years of investing, I find myself hesitating when it comes to investing in new markets. It can be any new industry, commodity, or even a new investment vehicle. Does it ring a bell? I'm guilty of not investing in the cryptocurrencies when I should have. Make sure to stick to the end of the video and I will share a proven strategy that I'm personally used to invest. The good thing about it is everyone can do it. By the way, let me know in the comment section down below if you knew about the cryptos in the past years and didn't invest like me, or even better if you did. So when you want to start investing, you should understand if you want to invest as a passive investor or an active investor, or even you can act as both, but you need to understand what is the differences between these two. For passive investing, or known as index investing, you will buy index funds, which is including the first 200 or 500 companies in the market. The good thing about the passive investing is anyone can do it, and you can expect around average of 7% in return. Of course, the past performance of the market is not a promise for the future performance, but this percentage is an average for the last decade or so in most of passive investments. Now to the active investing. Active investing requires your dedication and you doing your homework on the market. As an active investor, unlike the passive one, you're not going to buy a bit of every big companies in the market, but you're going to focus on the same market or same company. It means you're going to have 10 to 20 companies in your portfolio. So you have to be confident with those companies and you have to do your research. Basically, what we're looking at is to know what is the value of the company. We want to be confident in what we are investing in. So let me know if you want to know more in depth in active and passive investing and different strategies that you can take advantage of in these financial markets. If you're going to pick active investing, you probably want to stick to one investment vehicle. You can know all the markets, but it's best to be master in one. Know its ups and downs and know what are the potentials. For choosing your investment vehicle, it's best to ask yourself what you are passionate about, what you have interest in. You also can ask yourself what you know about the markets, which markets you are professional in, or it suits you. Just in a side note, know that best investment for you is you. So try to educate yourself in the financial markets. Read any financial books, magazines, or websites. It's all available online and for free, so if you're not doing it, it's on you. Financial markets and investing is fun, but it's brutal. So make sure to have plans for future and educate yourself as best as you could. Enough of grandpa advice, right? Back to active investing. For a start, you can think of industries that you can see around you. It can be real estates, commodity markets, or even stock market. Is real estate a good option for you? It depends. Are you people oriented, meaning you're okay with people, you know people, and you like to have interaction with them? Or maybe you don't want to have interactions with others. One of the caveats of real estate is it requires lots of capital. You can buy shares pretty much $1 and up, but can you find a deal like that in real estate? The other issue with real estate is liquidity. If you need money tomorrow, you cannot sell your house. But in share markets, in most of the cases, you can. And also, do you currently own a house? If so, you probably want to diversify more and expand on other asset classes. What about gold and silver? Do you like them? Have you ever bought them? The good thing about gold is everyone likes it. The required capital is not as high as real estate, but it is slightly more expensive than stocks. Of course, it depends on the stock too. It's not that liquid as in a stock, but you can sell it faster than real estate. One of the caveats of gold or silver is where to keep it. It has a keeping expense, including keeping it or insuring it, or even if you want to move it to another place. But it's perfect for hedging against the market. So you can consider a portion of your portfolio as commodities like gold or silver. What about the stocks? Stocks are fairly cheaper than gold or real estate, and it's easier to keep, buy, and sell. You can buy them and sell them tomorrow or even in a couple of minutes. The caveat of a stock is it's too many of it. You can find billions of companies around the world and there are too many news about it, and you don't have 100% control over it as you have over your gold or your real estate. The stock market is usually more volatile than real estate market, but it's less volatile than commodities like gold or silver. So which one are you picking? Which one is the best for you? Do you want me to go in depth within any of these asset classes? Let me know in the comment section down below. One more asset class that you can work on is your business. Really, your business can be one of the best investments you can do. For having active or passive investments, you require some capital, and this capital can be produced by business. So if you start your own business, you can create your own asset and then invest with the return on those assets, which is your income from the business. So maybe that's a good idea to think about starting a new business too. As a bonus, I want to share with you a powerful and proven strategy in share market that I've been doing for the past few years. It's called dollar cost averaging. It means beside of having one or two big investment every year, you're going to divide it to the months or weeks and then start investing those portions regularly and constantly. What is the advantage of this strategy, you may ask? You see, when you start investing regularly every month or every week with the same amount of money, regardless if the market is at the lowest or the highest, then you buy more when the market price is low and you buy less when the market price is high. What that does is help you with those feeling of greed or fear that you can get in the peaks and lows of the market. You buy more when it's less and you buy less when it's high. In average, in long terms, no matter what the market does, you will make profit. If you want me to go in depth within this strategy and with evidence, please let me know in the comment section down below. Last but not least, if you want to start investing in whichever asset class that you are comfortable with, please invest what you can lose and be mindful of the risks too. I promise you, if you have good risk management and good money management, once you start, you will tell yourself why I didn't do it sooner. If you found this information useful, your like and subscribe would be fabulous. And as always, if you have any question or comments, please remember to comment them in the comment section down below and I will promise to respond. Thank you so much for watching and we'll chat soon.